Welcome back to this session. So this session will be talking about another fund type which is known as a hedge fund. So basically, what is a hedge fund? A hedge fund is also a collective investment scheme and works very similar to a mutual fund. In a hedge fund, there's also an investment manager or a fund manager who pools the investment from various investors, invest them in the market, generate the return, and pass back the return back to the investors in the form of distributions. However, a hedge fund has a very different characters. Now, first, one, the initial size of investment in a hedge fund is high compared to a mutual fund. So, we have seen that in a mutual fund, an investor can invest as little as $400 in US or about like 500 rupees in India. However, in a hedge fund, the initial investment size requires is very large and typically about like $1 million to $10 million. So that is number one different. Second thing is about the regulation. Now, a mutual fund is a highly regulated entity, whereas a hedge fund, it is less regulated or non-regulated. That's why most of the hedge funds are domiciled in a tax haven countries like Cayman Islands, British Virgin Islands, etc. The third important thing is fees. Now, the hedge fund charges, mutual fund charges management fees, the hedge fund charges management fees and also performance fees. And the last and the fourth most important character is the investment strategies. The mutual funds follow a very basic, traditional and conservative investment strategies, whereas a hedge fund follows an aggressive investment strategies, and typically they do short selling, leveraging, that is borrowing and investing, and the hedge funds follow such kind of aggressive investment strategy. That is why they are able to generate more return compared to mutual funds. Now, talking about hedge fund industry, right? Alfred Winslow Jones is known as a father of hedge funds. Now, he was the first person who actually found this fund called as a hedge fund. Now, the idea behind Alfred Winslow Jones is he want to create a fund which is very different from mutual fund, and he wants the investors to get hedged from all kinds of market risk, and you want to generate a higher return compared to traditional or a mutual funds. That is, with that aim, Alfred Winslow Jones have founded the hedge fund. Now, let's look at some of the features of hedge funds. Number one, a hedge fund helps to diversify investments. Unlike mutual funds, which are very limited to equity and fixed income, right? The hedge funds invest in other different varieties. For example, the hedge funds can invest in real estate. The hedge funds can invest in alternative or non-traditional investments, like they can invest in cryptos, they can invest in artifacts, etc. So when it talk about the investments, they follow, means they invest in variety of asset class when compared to mutual fund. That is number one. Second, a hedge fund is private and unregistered. So as I mentioned before, the hedge funds need not be registered with the regulators, and as such it is less or non-regulated. Second thing is it's very private. When I say private, right, the hedge funds are for sophisticated investors or what we call as a high net worth individuals. Now these are in foreign countries like US, these are actually called as a accredited investors, means the investors who have a good knowledge about the financial instrument, structured financial instruments like a derivatives. So the hedge funds is mainly catered for the investors who are known as a accredited investors. Third, a hedge funds like a mutual fund helps to achieve the financial goals in the sense like investors want to invest, and the main aim of the hedge fund investors here is they want to generate a higher return when compared to mutual funds. Now, the fourth important thing is when it talks about the investment, the hedge funds invest in both traditional assets as well as non-traditional assets. Now, what do you mean by traditional assets? Traditional assets are like equities and bonds. Those are like fixed income securities are considered as a traditional assets. And non-traditional assets like cryptos, real estate and artifacts. The hedge funds invest both in traditional as well as non-traditional assets. The last one is it is not mandatory for the hedge funds to register. That means they are not mandated to register under the regulators. So these are some of the features of hedge funds. Okay. What do you mean by obsolete return? So obsolete returns, one of the characters of the hedge fund is they want to exceed the return which is provided by the market. Let's say, for example, in US we have Dow Jones 500. and this index generates about like 10% return every year. Now the idea behind hedge fund is hedge funds, they want to not only match but they want to exceed the return given by the indexes. That's the one reason which we call as a absolute return. The sense the return will be generally higher than the market indexes. So we have seen what is a hedge fund, what are the features of a hedge fund. Now let's look at how a hedge fund is structured. So when I'm talking about a hedge fund structure, right, basically a hedge fund can be structured into two ways. One, it can be structured as a LLP. LLP, when I say limited partnership structure. So here what happens is the hedge funds which are structured or registered are registered as a limited partnership model. Now, when I say limited partnership, what happens is when we talk about the investors. Now, let's say for example, the investors in the fund are about like 20. So, the number of investors are 20. Then the hedge fund will be registered as a limited liability partnership model. So, here actually what happens is there are two persons. Here there is a investment manager or the fund manager. Now, the fund manager in a LLP structure is called as a GP. GP, when I say, is that means general partner. Now GP is responsible for managing the fund, and the investors of the hedge fund, investors are known as LPs. LPs in the sense they are known as limited partners. So hedge fund, the first way it can be structured as a LLP. This structure can be done when the number of investors in a hedge fund is minimal, let's say around like 20. Then the fund will be structured as a LLP. This is one way of structuring a hedge fund. The second method is the hedge fund, also very similar to mutual fund, can be structured as a fund. Now when they structure as a fund, right, they structure into many different types. For example, let's say when we talk about the structure of hedge funds, first is known as a standalone hedge fund. Now, what is a standalone hedge fund? Let me explain what is a standalone hedge fund and how a standalone hedge fund works. Now, the first way the hedge fund can be structured is what we call as a standalone structure. In a standalone fund, the asset management company, they create one hedge fund. So, under what happens is here they create one hedge fund. That is why we call this as a standalone fund. In case of standalone fund, the hedge fund is created, means they create only one hedge fund. Now, how this works? Okay, for example, let's say there is a fund manager called as a BlackRock. Now, BlackRock is a asset management company. Let's say that there is a BlackRock. Now, this BlackRock, let's say they are creating one hedge fund. So, they are creating a hedge fund. Now that is, let's say for example, how this fund actually works is, now they create one hedge fund. Okay, let's give a name for this hedge fund. Let's say this fund is called as a BlackRock hedge. Let's say for example, BlackRock ABC hedge fund. Now there are some, what are the typical characters of a standalone fund is, the standalone fund will be created in one particular geographical location. Let's say for example, it is created in New York. So the fund is domiciled or the fund is created in New York. That's one thing. Second thing is the fund is actually created for the purpose of US investors. Now this fund will be for US investors. The fund gets created in US and they are only for US investors. The investors basically who invest in the fund are actually US investors. So this type of structure we call as a standalone hedge fund. This is the one type. Basically under standalone hedge fund, only one fund is created and this fund is operated from one location and it is for the investors usually from that location. The second type of structure, what they create is called as a side-by-side hedge fund. Now, how the side-by-side is different from standalone hedge fund. So, let's have a look at the example. Under here actually what happens is the fund manager here, they create two hedge funds. Okay, for example, let's say BlackRock, they create two hedge funds. One is known as a BlackRock ABC hedge fund, and other one is known as a XYZ hedge fund. So what they do is they create two funds. One is called as a ABC hedge fund, another one is called as a XYZ hedge fund. So in a side-by-side structure, they create two funds. Now, why do they create two hedge funds here? One fund is for domestic investors. So this fund is for domestic investors, and the other fund which they create is for foreign investors. So they create two funds, one for domestic investors and one for foreign investors. Now let's say, for example, the fund ABC over here is for domestic investors. So ABC fund is for domestic investors. Let's say this is for US investors who want to invest in US market. For them, there is a domestic fund. The domestic fund is also called as a onshore fund. The domestic fund is also called as an onshore fund. On the other hand, they create one more fund. It's for a foreign investors. Let's say this is for global investors. And this fund is called as an offshore fund. Now, what is the feature of this fund is the domestic fund. Let's say, for example, the domestic fund collects about like 100 million in investments, and the offshore fund collects another 200 million. The total capital, if you see, right, it's about like 300 million. But however, what happens in a side-by-side hedge fund is the funds are managed separately. Means in the sense the funds are not commingled or mixed, they have been managed separately. This is how the side-by-side fund actually works. Now, the third way of creating a fund, hedge fund, is master feeders fund. Now, how does the master feeder fund actually works, right? They create two categories of funds. One is called as a master fund. The master fund is also called as a parent fund, and the master fund is used for investment purpose. And this master fund, usually it's created or domiciled any one particular location. Let's say they get created in a country like Mauritius or Cayman Islands or a British Islands. Now, that master fund is used solely for investment purpose. And in another type of fund, it's called as a feeder funds. They create multiple feeder funds. Now, these multiple feeder funds get created in multiple geographic locations. The main use or intent of creating a feeder funds is for collecting and distribution. Means the feeder funds are used for collecting the investments from the investors and returning back to them in the form of distributions. So the feeder funds are most used for subscription and redemptions, and the master fund is actually used for investment purpose. So the hedge fund can be created using master feeder hedge fund structure. And the last, another important structure is, it's called as a FOF structure or fund of fund structure. So basically, how a master fund of fund structure actually works is, right, the hedge fund creates let's say, for example, BlackRock. Now, BlackRock creates a hedge fund. They will not invest in any assets like any other assets in the market, but instead they will invest this money in the other hedge funds created by other fund managers. Now, let's say BlackRock creates a FOF fund and they invest in PIMCO hedge funds, they invest in Bridgewater hedge funds, they invest in Blackstone hedge funds, like that. So this type of structure is called as a fund of fund structure. Now, to summarize, hedge fund can be structured in two major categories. One, as a LLP structure. It can be created as a limited partnership model when the number of investors are less, and the fund can be in case of funds, they can be created using 4 different methods, like one, standalone hedge fund where only one fund is created, side by side hedge fund where there are 2 funds are actually created, master feeder funds, multiple funds are created, and last, FOF, where the funds mainly created and invest in other hedge funds. So that's about the hedge fund and hedge fund structure. Thank you.